Good evening, folks. Good evening. So, back with another trade breakdown. Took a buy today on pound yen, which resulted in a win, which was pretty good. So, just kind of going to break that down and then lead into a bit of um what I want, or not what I want or what I expect, but sort of like just a forecast for the remainder of the week, areas I'm going to be paying attention to, and hopefully we can get some more trades this week. So, just on the replay tool on pound yen. So this is kind of just basically where my session begins. So I'm looking for buys because these two 4-hour candles are bullish. We have a 4-hour resistance right here, which this previous 4-hour has rejected and closed back below. The three previous 4 hours have failed to close above this area. So if a 4-hour candle does close above this area, that would be a good kind of confirmation to say, well, we're now above this level. If we can form support above this level, we can look to then continue. Looking left, there is another 4-hour resistance here, which this kind of rejection from with this candle. And then left of that, there is a support which this resistance kind of respected on the way down. So a couple of levels in here on the way to 164. When I came to the charts today, I believe it was around maybe around 7:30 or so. So if I just go to the 1 hour chart, this is what it's looking like on the 1 hour. So I do like the fact that we have a support here. We pushed up, targeted the target, we closed above the resistance, we pulled back to a previous level of structure being the resistance, and we formed a higher support closing above these candles. So that's nice, right? But of course, we are still failing to close above the 4-hour resistance. So if I go to the 30-minute chart, we can see there that this here support formed, price pushed up. It's only 6 a.m. So if I go to 7 or half 6, sorry, 7, half 7, right? So the bias is bullish. We have a close above Asian high, most recent 30-minute resistance here, and we're above the zone. So there's a good chance of continuation on buying on this candle, right? So this candle closed at half 7. So see when this candle closed, to me, this shows that there's momentum in the chart. To me, this shows that there's volume in the chart. In price at the moment. Okay, we're also above the most recent 30-minute. Resistance looking left in terms of where sort of our Asians tapped into. So what I done at this time was, well, I said to myself, the sort of win rate for breakout candles in line with, or not in line with session bias, just breakout candles in general, targeting a 1-to-1 is 76% this year for me, right? I'm yet to kind of do the, I'm yet to go into a bit more detail within that and see what the sort of win rate for breakout candles in line with a session bias. Typically, they would be it should be higher because it's more of like a continuation, and you have more in your favor in that sense because we're moving in a certain direction, and continuing. So when this closed, I said to myself, well, I have my data, right? There's a bit of volume in the market, which seems with this candle close, we're bullish, we're moving up in the market. From a 4-hour perspective, we've closed above resistance. So what I done was I actually placed a buy stop above the high, right? I was actually just watching how we opened. If we pushed down and then we broke the high, I was probably going to enter, right? And that entry was just solely based on my data collected on win rates of breakout candles. Okay. And basically then achieving 1-to-1. So if I put on the risk reward tool, excuse me, for a 1-to-1, breaking the high, stops below the candle, targeting a 1-to-1, it was going to bring me up to basically 164. Right now, that's not to say that I was going to get there, or that's not to say that price is just going to continue. That's not to say that I wasn't going to manage my position when we got to here or here or here or here. But just from a data perspective, when we have a breakout candle, I have X amount of percentage win rate. All right. So regardless of bias, direction, what's in front of me, I just know that when this happens, this is the percentage of it winning, right? So the candle actually opened. Now you might have said, well, that is based on candles closing, right? So I could have took the trade on the candle close, right? But because the range between the close and the high of the candle was only 3 pips basically, I wanted to see what actually happened when the next candle opened, because basically last week I took 2 trades, and leading into London Open, price was actually bearish, so we had a bit of a pre-London pullback. So in the fact that we had a bit of a pre-London pullback a few times last week, I was just curious to see if we actually moved down first and then continued. So the fact that I could, enter here and there's a risk of price just breaking down, or I can wait, and if price breaks down and then pulls back up and breaks the high, I can still enter, right? Because when you trade confirmation candles, this is very basic, but it's like you can enter on the close, right? There's a probability that it's going to continue for a bullish bias, close above resistance, and so on. But because the range is so small between the close and the high, and basically my most recent trades leading into London, there has been a pullback, right? So on that basis, I didn't enter on the close. I seen price open and it pulled down a little bit, right? It pulled down to about here, and then it started to push up, and it looked like it was going to flip and break the high. And I said to myself, do you know what? Based on my data on breakout candles, I'm placing a buy stop below the above the high, stops below the low, target a 1-to-1. And because this candle closed as such, like how big it did, I was potentially expecting or anticipating, more continuation, and price to just continue on. And whether we close up here for the R or up here or reject here, who knows? But that's a strong looking candle. If you just looked at that candle alone and you said to yourself, well, what direction do you expect price to go after this? You would say upside, because of how big this candle is. So if I just skip the next candle, as you can see, there's no like wick at all. It just opened, pushed down, bearish. So when this happened and this candle pushed down, rejected, and closed above here, what I done was I actually deleted my buy stop, because when I looked at this on the 15-minute time frame, it just sparked to me that like last week this is exactly what happened, in terms of we pulled back, and then as we broke the high with London Open, price continued. So when I seen the next candle, 15-minute candle, open here, push down, top into the zone, essentially this is just a break, retest, and as soon as we break here, we're continuing. So I actually entered as we broke the high here. So it's the exact same entry I would have been, but for my stop loss, I just used the current candle, because we have broken down, tapped into here, we have pushed up, we have pulled back down, tapped into the zone, respected the low of the previous, broken the high of the previous, broken the high of the previous, broken the high of the previous, and there's volume in the market, and we're pushing up. So I entered market order with my stop below, and when price pushed up to this 4-hour resistance, we were stalling around here a little bit. Price then pushed up a little bit more, and I just looked at my MT4 and I seen the figure, and the figure was more than what 0.5% would have been. So I just closed it, right? I was happy with it. It's a Monday. Yes, we're in a bullish bias. There, we're in continuation. We're in volume. This could continue. You know, it continued up to here, so it did get a 1-to-1. It could have went up to here. But there was very good discussion today in the live lounge about this 4 hour resistance in particular as a target, and just being happy with what you can see and getting to there, and how if you are efficient and you can do this on a regular basis, you're extracting money from the market, and that's what we're all here to do, regardless of targets, regardless of price going to here, wherever you had your target. You know, if you can effectively just, you know, take wee bits and pieces from the market, you're going to be consistently profitable. So really good discussion in that, and we can, you know, you can just see how this level was an important level, because the next 30-minute candle pulled down, and then we just started downside. And if I just skip to the 1 hour, you know, the 1 hour closed above, we then closed the higher again, respecting the high of the previous, and then we had some form of downside. So, you know, essentially when price pulled down here, this could have potentially been, you know, an option to look for an entry on a 1 hour, in a sense that you've closed above resistance and formed a target, and now we've pulled back in. So if support start to form in here, it could be a possible option to buy back up to target the target. But if I didn't take this trade, and I was waiting for a trade, this is probably what I would have been doing. I would have looked at the 30-minute and says, well, we've created a target, pulled back, targeted the target, that's been met. There's a new target here. So if we form a support here, maybe if we start to break the highs, break back above Asian range, price can continue. But it's a little bit cleaner on the 1 hour. You know, you have a push up, pull back. You could look to form a support and continue. But this is obviously a bit later in the day for me, so it's not something I'm looking for. But if I'm looking at my own trade, and I say, you know, how could I have improved this trade? I think from a 30-minute standpoint, this is, you know, a good trade. You know, I think just from looking at this on the 30-minute time frame, there isn't anything that stands out to me that I can think of off the top of my head that I can improve this much by on this time frame. You know, essentially what you could say is, well, if we break this high here, which I believe is the 30-minute high here, when this sort of breaks here, you could enter there, right? And if I just kind of look at my risk reward with the exact same stop with a bit of entry, we can see that that's improved that slightly, right? It's went from 0.6 to 0.8. So that's an improvement there in a sense. From a stop loss perspective, I believe I have my stop loss in the right area. I'm just skipping down to the 15 to see was there anywhere that I could improve on the 15. 15, I can't see anything. When I go to the 5, again, I can't see anything, because essentially I think the stop is in the right place. We can see that we have formed a support, lower resistance, lower support, we have pushed up, formed a lower resistance, and then we have pulled down and closed this candle. This 5-minute candle's closed above resistance. So when this candle closed, which if I just mark this up, I'll just change this to red here. No, that's nice. I'll just change it to white. So if I mark that up, that's a 5-minute entry. If I go to the 30-minute time frame, we can see that this breaking the highs or changing the structure on the 5-minute back to the upside, which is kind of, this is how we draw it here. We've pulled down and we've broken above this resistance, right? The most recent like sort of swing resistance on the 5-minute. But yes, you could say that that's an entry on the 5. However, if you look at that area on the 15, you've broken the high of the previous, but you haven't broken the resistance. And looking at that on the 30 as well, you're sort of below. So there is every chance that if you entered, you know, where that 5 was, which is here, that price could have pushed up and then rejected off that resistance and come down. So I think, you know, I wouldn't say that I could have improved that greatly to my ability and to my comfortability. using that time frame. Breaking the high, most certainly. I do like that idea of breaking that. But breaking this high, essentially, the reason I wanted to break that high was just because we can continue on from this point, because it's the highest point that we're currently at. So if we're breaking that, there's a good chance that we will continue in that sense. Now, this is based on the 30-minute, looking at the 15, looking at the 5, but if I actually go up one more time frame, I can see that there was a improved entry on the 1 hour, right? So if I just remove this, this is my trade. So I entered as we broke the high here on the 30-minute chart. So when this candle closed here, this made the hourly close, which is this candle. So what I could have done in that case is, well, if I entered on this hourly close, let me just see how, well, this is an hourly close. So if I go below that low, or that's a 2 hour, apologies, I was looking at the 2 hour chart, the 1 hour chart. Okay, so this is the hourly close. So 7:30 candles pulled back, closed here. If I just enter a buy here and have my stop loss below the 1 hour, and I target, or I get out where exactly I get out, or target this 4 hour resistance to 0.87, so it's improved again. And if I basically close out where I initially closed, that's roughly a 1-to-1. So I could have waited for the hourly close. You know, the 30 minutes closed above resistance, but the 1 hour still open. So there's every chance that the 1 hour could pull back and we could close back below Asian range or in the zone. If we close back below there, that's not a great sign. So waiting on the 1 hour to close is a solid confirmation. It's obviously a stronger confirmation in the 15 and the 30. So this basically could have been exactly like what my original idea was here. When we break this high, continue, so it's more of a continuation trade. So when we look at this on the 1 hour, we can see that we close, enter in here, you could buy the continuation essentially just on a higher time frame. Because the wick to the close is like 11 pips, it doesn't make sense for me from a risk reward profile to buy on the break here using a stop loss below the 1 hour. You can kind of see that on the 30-minute and on the 15-minute you can get an improved stop loss position using those time frames, and technically you would be taking the trade off that time frame itself, so there wouldn't be any need to then use hourly stop loss positions when you're entering on a lower time frame. So if I was just taking trades based on the 1 hour, this would be the trade. Now, what I like about this is it's a solid confirmation, right? It's a strong close above. It's a 1 hour, so it's a stronger close in the 30-minute. The only downside to that is, well, how did this 1 hour form? It formed with a bullish candle which closed up here, and then the second half of that 1 hour was a bearish 30-minute, which meant we have this wick and we close here. So when this candle closed, although it closed bullish, the direction the price was going as this candle closed was actually bearish, because the 30-minute closed bearish and the 15-minute closed bearish. So when this next candle opens, we actually push down, which is London open. So we pushed down in the direction the price was going, leading into London open, and then we find support in the zone. Resistance here acts as support, resistance zone here from 30-minute acts as support, and then price pushes to the upside. We would then flip bullish on this candle and then continue. So the only downside to entering on the 1 hour close is the direction the price is going, leading into that close. So the next candle, there's a higher probability the price is going to open in that direction, which means if you enter on this close, there's the likelihood of price pushing down first is greater. So you're going to sit through some drawdown. So to kind of counteract that, if you do know that this is happening, you could essentially just wait for the price to push, and then as it flips, you can look to enter. So I think reflecting on this trade, I think taking the trade how I did out of all the time frames, the 1 hour, the 30 minute, 15 minute, I think was the better option in terms of, well, it's not necessarily the better option. I mean, I feel like the better trade, the one that yielded the most result, would have been the hourly close, right? Yes, you would have incurred some drawdown, but if you understand that maybe price only pulls back so far, you look into that a little bit more deeper and see, well, how far do we pull back often on when we're moving in that direction into that close. You can then see if it's more comfortable for you. I mean, if I was managing this on the 1 hour, I probably would have said, well, do you know what, if we maybe start to break back below this 4 hour, which is probably roughly around 0.5%, I would have maybe closed the position. But it is interesting to see that we did close bearish leading into the London Open, and then when we opened, we moved down first in the same direction. So, I mean, if I see something like that happen the rest of this week, that could be something to that might tell you, well, do you know what, be a little bit more patient. Just sit on your hands a little bit more and see what happens first. I mean, if price just opens and pushes up slightly, then you can still enter the trade. But it just depends on, you know, the sort of direction the price is going. Because it is closed bullish into a volume session or a volume open, there is every chance the price can just bust to the upside and doesn't have any sort of lower wick. So again, it's all down to how you would like to enter that. But from a improvement standpoint, I think to improve my own trade would have been to enter on hourly close, stops below the support, which is the breakout candle. In that sense, I have a bigger stop loss, which is 26 pips. I also have Asian high zone to act as a reaction point. I have a resistance here, which can also act as a reaction point for price. I have a 4 hour resistance that we have closed above that can act as a reaction point. I also have this resistance here. So anytime price is moving down the way, I have like little barriers in place that price can ping from and can maybe struggle to break below. So in saying that, there's what, about 4 or 5 of those. You know, that could be enough to say, well, do you know what? I believe that we mightn't come down as far as that. If we're bullish in the market, the session pass is bullish. We closed above Asian high on the 30 minute and on the 1 hour. There's a strong confirmation that we will continue to upside. And that's exactly what price did. It pushed to the upside. So I think reflecting on this, yes, I entered on the 30 minute as we broke the high with stops below the sort of that candle it was breaking. Was a good option. Looking at the 1 hour, that was a more solid option in terms of what it yielded. However, from an efficiency standpoint, I did occur, or I would have occurred some drawdown with the 1 hour trade, whereas with my entry on the 30 minute, I didn't have any drawdown. It was more efficient. So I think on that basis, that trade is the better trade from an efficiency standpoint. But of course, from a risk reward profile, the 1 hour would have been the option for that. So I think that's a pretty good breakdown on that standpoint. So if I just delete this and I'll just hide my trade here, if I come out of the replay tool and I just look at where price is now, so from a 4 hour standpoint, if I go to the daily, I have this most recent support and resistance marked up. I'm just going to remove my drawn tools. So we're still above, you know, the main daily resistance zone here. We pushed up, we pulled down, we failed to break down. We did close above on Friday. So now this day's open. We're obviously struggling at this support. So you know, a daily closure above this support would be a solid confirmation, because if we can then close above and we pull back down, potentially the support zone from here to here could act as an area for us to find higher supports to buy, right? So give me 1 second. Okay, so yeah, it was just getting zoom on there. So what I'm sort of looking at here as well, we have this support here. Okay, so what would be key for me is if we can have a daily candle closing above like this. Obviously, if we close above the wicks, that would be even better. And then on the next day or the next couple of days, if price, you know, comes down and we come to this zone, if price can then respect this zone and we can have supports like this. This could, I would probably looking for these supports on maybe the 4 hour, changing structure on the 1 hour, looking to buy that up to the target, and then of course, you know, continuation. If you're looking at the most recent support and resistance from a range perspective as to where we are, in my opinion, I would be looking at this and I would be looking at this. Right, we came from here, we pushed down to here, we pushed up. If I just drew this with arrows, we came from here, oh, we pushed up, we failed to break down, we closed above resistance. So essentially this is the top of the range from where we're in. So any buys longer term would be looking to come back up to here, but that's of course looking on the likes of a daily standpoint. There is going to be levels in here and so on and up here in like 4 hours that are going to be very important. But what I'm seeing as well is, well, this is the support zone that we're currently failing to break down. So I'd be looking at that. This is our most recent resistance. Of course the zone's going to go up to the wick high, but if I look at this from just bodies, this is, let me actually just draw it on at the bodies here. Support, resistance. You can see that we've closed above, prices pulled down, and we're respecting this resistance as support. So there's every chance that price might push up, right? But there's every chance that we might close back in here. So I feel like if we close within there on a daily, there is probably a higher chance of price to test the opposite end of the range. So if price closes, say, in here, there's probably a greater chance of price to test the bottom, the opposite end of the range. However, it could just be a deeper pullback to then find support to push higher. So if we close in here on 4 hours, things like that, if we have candles closing back above this resistance on the 4 hour, to me that would be a good sign to potentially buy up to the target. So if I just look at this on the 4 hour time frame with all the zones away, if I look at the daily, so the daily resistance is at 162.464. It's 162.464, just roughly here, right? So we're basically at it. So to me, if I just draw, let me just draw in the resistance then. So that was roughly around here. So to me, if price closes below, and if we close below on 4 hour, right, there's every chance that when price comes back up the way, that price maybe uses this daily resistance as a place to find resistance, lower resistance, to continue down, probably continue on down to here, because essentially what we're doing is we're closing below a higher time frame resistance. So that area could act as a bit of a wall on the way back up. So what I would like to see, if we do come below, if we stay above, that's even better from an upside perspective. But there is every chance that we can come below. So in terms of kind of preparing for, well, what if that happens? If we close below, let me just draw and we come here, for example, because this candle is forming at the moment a support, that is going to be, and then this candle forms a resistance, that's going to be a lower resistance, right? So the fact that this area here could act as a area to react that for downside, this resistance here could also do that. So we could come up to here, we close above, we're like happy days, and then we hit into that 4-hour lower resistance, and then price comes down. So if that does happen, what I would like to see is a change in structure on the 4-hour. So I would like to see a 4-hour candle closing above the resistance, and then if we start to pull back on the next 4-hour, look for lower time frame 1 hours closing back above here, 30-minute change in structure to target the current 4-hour, which would be here, which would be the new target. Essentially, continuation could be up to the range highs, because we'd be sort of playing in this on the 4-hour, and then look to potentially buy that up and continue. So from a weekly perspective, if I just look at where we are on the week, again, last week formed a support, but this support here could just be a pullback for price to tap into a previous level of structure, which is a lower. We have a support, lower resistance, lower support. So like this could just be a pullback into this previous level to continue down. However, on the daily, we're finding it hard to break through here. So yes, we broke through here, but we failed to continue. We had a big rejection. We then formed a lower resistance again. As soon as this candle opened, expect downside. We popped to the upside because of where we are. We're failing to break down here. And now that the daily has changed structure back to the upside, I do prefer price to continue. This support here is obviously being a bit of a pain in the backside because we failed to close above this on 1, 2, 3, 4. This daily candle isn't closed yet. However, it's unlikely for me at the moment to close above the support. So this could just be a retracement to find potential liquidity to push to the upside, or just a deeper retracement. Looking at this on the 4-hour, essentially we have closed above this most recent resistance, so this could just be a pullback to find support to continue. The only thing is we've closed below most recent support, which could act as an area for downside. So essentially I would like to see a change in structure back to the upside, in order to do that, whether we come and close below the daily resistance, and if we are, likely where price is going to be is, most likely going to be somewhere, let me just change that, so somewhere down here. So where did we come from? Well, we came from here and we're doing this. So on the way back up, I would want to see a change in structure. Most likely, that's not a great drawing, but most likely above this. So if we can close back above and then find a higher support to continue, because essentially we would have lower support, lower support, lower support, higher support, higher support with a close and a back above the most recent lower resistance, and then we can look to target into these levels and continue. So it could just be that this week could have more downside in it, and that could just be a deeper retracement to come back up to the upside and maybe have something similar to how this week had this big rejection week. Maybe not as deep as that. However, if price continues down, we could, if we close below, test the upside end of the range, which is about 161,500, which is going to be about here, and then maybe see some upside. But that's just my sort of forecast, based on those current time frames, daily, weekly, 4-hour, and of course just where we are. So yeah, I would like to see a bit of change in structure, because essentially we're breaking supports and forming lower resistances. So if we can start to change that back to the upside, that would give me a lot more confidence that we might start to continue in that direction. So a long video, a 34-minute video, but yeah, just thought I would post my thoughts on that. And if anyone does watch at the end, Do appreciate it, and thank you very much.